So something is troubling the market apart from global cues, of course. Manish Gunwani, the Deputy CIO Equity at ICICI Prudential Mutual Fund, joins us now to talk about that. Hi Manish, good morning. It's been a volatile run for the market, and it seems like we are devoid of any major positive cue to take the market above the funk that it is in right now. How are you reading into it?
Yeah, I guess what's happened is globally also, because of a weakening of the dollar, we've seen a lot of EM currencies and EM markets rebound a lot over the last 2 months. And again, suddenly because of this Fed issue, and maybe just because of technicals where the DXY has kind of lost 5-6% over the last 2 months. So I guess it will have a retracement at some point. So I think what you're going to probably see is EM markets hopefully consolidate here, because we need to see how the dollar moves from here. That's on the global side. I think on the domestic side, of course, we think monsoon is very important this time. So while all data seems to suggest that monsoon will be okay, but just the tail risk is still there. So I think these are a couple of things which are kind of influencing the market at this point of time.
Manish, more in terms of flows. Lawrence Belanco's chart pattern we just read out, and he sees some major bearishness in both Wall Street and European indices in June, July. And Ashwini was corroborating that for us. Now, in case this FI outflow, both from India and from EMs, were to continue, move into a flood in June, July, what is the sense you're getting from the DII flows? Yesterday we had Edelweiss telling us that the amount of SIPs is rising at such a pace and has become such a reliable number that we shouldn't really worry much. What's your take, both on the domestic flows and whether it will be able to counter FII outflows, if any?
So I think from what we're seeing right now, the domestic flows are stable. We're not seeing major movement up or down. It's kind of pretty stable. It's not as high as it was some point last year when they had gone up to almost 8,000 per month kind of levels.
What is it now?
I think the published data is roughly in the range of 3,000, 4,000 kind of stuff, if I remember correctly. And I think that's where it is stable. Now, whether it can counter outflows, I guess obviously you'll have to see how strong are the outflows, if at all. Generally, we seem to be in this tug of war many times during the year where Fed makes some suggestions about hiking and then the markets collapse and then they go back. So this kind of mini cycles we've been playing for many times now, and I guess it just looks like one of those cycles all over again.
Okay, with Sonia's permission, I want to continue this debate a little more. There has been seminal changes in the legislative performance of this government. Bankruptcy code passed, and we were just showing the math. Now 2/3 present and voting will be in favor of the GST. The Congress left combined moves to less than 1/3. So assuming that August monsoon session sees the GST pass, do we have the spunk to be the outlier even in the case of a global downturn?
Well, Lada, I think, look, I mean, GST is very important, but it's just one piece of the jigsaw puzzle. I mean, if it happens, obviously it's a big sentiment booster. But my sense is, I think the global factors are very powerful, typically, at least in the short term. So if you're going to see emerging markets underperform and flows going out of EM funds, in my experience, I've rarely seen anything domestic that counters that.
I would mean counter to the extent that that outflow EMs is inflow India, but much less because
you could outperform, obviously. I mean, even if you see over the last 2-3 years, obviously we've outperformed Brazil and Russia and China. But at least for us domestic investors, we're looking at absolute returns in rupee terms, right?
Yeah.
So that's not going to be very cheerful, unfortunately, I think.
Okay. I was just going through some of the top holdings in your funds, and I've noticed that you've recently added Bajaj Finance into one of your funds. Bajaj Finance and Bajaj Finserv as well. I know you won't talk about individual stocks, but I just wanted your thoughts on this space as a whole, NBFCs, and whether there is more upside here.
Again, as you know, we'll not comment on stocks, but in general, I mean, whether it's banks or NBFCs, we've always maintained the view that private banks and retail lending NBFCs are in a sweet spot at this point of time, because definitely the capacity of PSU banks is very constrained. And unfortunately, I think over the last 2 years, we've not seen very high clarity on government stance towards PSU banks. So a lot of them, even if you see the results this time, it does look like they will be capital constrained for a long period of time, which basically means that there is a lot of space for these private banks and retail NBFCs to expand.
Okay. So which other than NBFCs, which other than private banks and NBFCs are sectors that you will bet on at this stage of the economy?
So there's select consumer discretionary names we like, whether it's auto, retailing, those kind of names.
Okay.
I think at this point definitely looks like that leap from consumption to investment is a wide chasm. I mean, I think the outlook on investment still very difficult to gather, because well, the government's doing a lot of spectacular stuff, but at the same time the private capex just seems to be so tepid. And without that picking up, to get very optimistic on a broad-based capex cycle, that looks a bit tough.
Okay, if